Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me is Ethan Fast, co-founder and chief technology officer at Nash, and the owner of one of my favorite Twitter handles, to discuss how blockchain can help remote companies to securely and efficiently pay workers and grow their business, as well as the evolution of Bitcoin over the past decade. Ethan, it's great to have you back on Trade Talks with us. Welcome back.
Thanks, Jill. It's great to be here again.
All right, let's talk about that blockchain and how it can help remote companies to securely and efficiently pay workers, even though they're around the world.
Yeah, so this is something at Nash that we took a lot of advantage of, especially when we were just starting out. We had, even at the very early days, we had people from like 5 or 6 different countries. And as you can imagine, it would be pretty difficult to navigate sort of all the international wire transfers and regulatory concerns around paying full-time employees across that many countries. So we took advantage of cryptocurrency assets as a kind of borderless sort of means with less friction to pay our employees. That allowed us to bootstrap and eventually have the infrastructure where, say, for example, today we could actually navigate all these wire transfers and so on. But at the beginning, it was so helpful for us just to get started to bootstrap the company. And I think even if you think about sort of bigger companies moving long term, there's still a lot of advantages to this sort of very low friction, low fee kind of means of transaction for paying employees. So that may be something we see more of in the future.
How about blockchain and freelancers, as well as part-time and full-time employees with their personal finances? How can blockchain help there?
Yeah, I think it's a kind of similar story. So again, if it's easier for them to take payment, right? So if you live in a country where, let's say you're a contractor there and people don't want to deal with your national currency, right, you can be paid in a cryptocurrency and then kind of take care of converting that yourself. And I think that's really helpful to a lot of people.
All right, now Bitcoin, let's talk about the evolution over the past decade and why now is the perfect time for users to begin using Bitcoin on a decentralized exchange.
Yeah, so I mean, when people think about Bitcoin and evolution over the decade, I think the first thing they think of is price, which obviously has changed a lot, has gone up a lot. It's sort of on a consistent uptrend, even if there is some volatility. But the network itself is also growing in pretty big ways. So one number that I like is the number of daily active addresses on the network. And this is something that if you look at over the past few years has more than doubled. It's gone like crazy if you're thinking about that since the very beginning of the network. So really the use of the network as well as the price is increasing. And this is part of why we at Nash really wanted to have a good solution for users to trade Bitcoin. And one of the big problems in this space, which maybe we can talk about a bit later too, is this idea of security, right? And people using these centralized custodial exchanges where they have to trust those exchanges with their cryptocurrency assets. We wanted to provide a non-custodial solution that's much more secure for people to trade those assets.
So Ethan, tell us about some of the other features that's available on the platform.
Yeah, sure. So we're very excited soon to be launching this service called Nash Cash. So this will be available in Europe and will allow users to buy cryptocurrencies with euros and other national currencies. So until very recently, you had to work with a third party to convert a national currency to a cryptocurrency on our platform. And we're very excited to provide a much better user experience around that. And another thing I'd like to mention is it's a bit further out, but we have Nash Pay, a service that among other things is going to allow merchants to accept cryptocurrencies from users without worrying about the process of converting those currencies to more stable assets with less price volatility. So basically, you can receive something like Bitcoin, and that will be converted through our exchange and sent back directly to the merchant's bank account.
So then decentralized exchanges, are they more secure than centralized exchanges? How could that be is the first question. And when used correctly, a decentralized exchange, if you think about it in theory, you really don't need a middle person. If you have your wallet and you have the technology behind it, why would you need a bank? Why would you need a broker? It seems as if the technology exists to eliminate all of that.
Yeah, so on the security front, really the big thing that we've seen a lot of this over the past years is just you have exchanges that are either sort of sketchy or they're not following regulation, they have bad actors within the exchange, or they get hacked. And then what happens is the user funds, because the exchange controls all those funds get drained away more or less. So I think like in 2019, we had like around 300 million in funds being drained away. So that sort of thing is a really big and important risk. And it's also just kind of ironic, sort of given the spirit of this cryptocurrency platform where people are controlling their assets, right? That you're then giving up control in such a huge way to these exchanges, which is not something you deal with in like traditional equities markets, for example. So non-custodial exchanges basically remove that security issue. A non-custodial exchange trusts the user to maintain the control and security of their funds. And so there's not this sort of like centralized point of failure, which kind of directly goes after that really big security issue.
Tell us what's new with Nash. You have some new Bitcoin trading features to tell us about.
Yeah, sure. I don't want to go too much into the technical weeds, given just the limited time that we have. But basically, what Nash does is we have something called, and this is for the Bitcoin trading feature, we have something called a Hashtimelock contract, which basically what it does is it ensures that the user's funds are available for trading on the exchange, but in such a way that those funds can't be moved without both the user and Nash agreeing for them to be moved. And sort of by default, this is why it's called a hash time lock. If a certain amount of time expires, those funds will go back to the user. So this is how we can sort of make sure that the funds are available for trade, but also sort of not take control of those funds when we're matching trades on the exchange. So that's kind of like the high level technical sort of glue for the Bitcoin trading feature. And this is kind of similar to the Lightning Network, if people have heard of that in Bitcoin. I know that's a pretty popular term.
Yeah, well, okay, so for those of us that are not as familiar, we have a very broad audience at Trade Talks. What solution is that Hashtimelock looking to provide? What was the problem?
Right, so we just talked about the non-custody and the importance of non-custody on exchanges. And the big issue with Bitcoin is that it's sort of more difficult to get that non-custody. On a blockchain like Ethereum, you have these very powerful smart contracts, and those smart contracts can sort of be this disintermediary of custody, right? So you can sort of give your custody in some sense to the smart contract or to the network to facilitate those trades. And so this tool, unfortunately, is not available on Bitcoin. So what we do to work around that is we use this sort of less powerful, but still fairly reasonable tool called a Hashtimelock contract to give us some of the properties that we would get with those Ethereum contracts, maybe not quite to the same degree, but it still increases the security around those funds much more so than you would have on a centralized exchange.
Have you heard of increased trading, Bitcoin trading, with people being home and working from home? I know certainly in the equity space, it's, you know, the Robinhood traders, people are home, they're getting their stimulus checks, they're putting more money into the market just to learn how to trade, or in the absence of sports betting, whatever narrative is out there. Have you seen an increase in Bitcoin trading or digital asset trading in general with people having more time at home?
Yeah, so it's really early for us since we just launched this feature, but I would say that yes, we sort of we have seen an uptick in people over this time period. I know anecdotally, I've also encountered that with some people. So yeah, I would say yes.
Yeah, that would be interesting to follow up on as you start to get some more traction and more volume, because I think that's an interesting story out there with more investors having the time and the opportunity to learn about the technology and digital assets. Ethan, it's great to have you with us as always. Thanks so much for joining me on Trade Talks.
Awesome. Thanks, Jill.
All right, and thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.